Traders, welcome back to our price action trading lesson. We're going to use pure price action to help us understand how markets work. We're looking at S&P 500 and mini futures. The time frame is 2000 tick chart, which is very similar to 1 minute time based chart. And the structure of our market right now is indicating for the most part neutral bias consolidation. This right here is the high of the day important key level, low of the day important key level right here. Now the reason why I'm selecting this point right here and not this one is because if I select this point right here, it feels a little bit too detached from the original price action. Empty room here, feels a little bit too broad. So I like keeping the key level at this point right here because it feels part of this overnight session. Now, as I get more price action, I can always adjust my key levels a little bit. I also have to follow short-term trend line rule. We are in a trend range, so I don't want to draw any super broad channel like this. I want to follow the short-term trend line rule. There is a trend line rule for every single price movement, whether it is short-term move or big channel, big price action. There's always some channel being in play. Breaking new high, uptrend played out, and I have to right now follow the most recent structure. So I have to redraw a brand new downtrend. You can see how nicely these candles fit. We have a break, a new extreme already. Okay, so downtrend played out. There's also one more thing that catches my attention when I'm analyzing the structure, and that is we have quite a bit of empty room at the top of this trend range. You can see we are struggling to test this key level right here. So there can be slight bearish bias, but we'll see what's going to happen. We have a high low here, but a little bit too early to go long. I would really prefer to get a felt second entry short above EMA to truly know there's not going to be additional pullback, but the key level is holding nicely. I'm going to redraw a brand new uptrend working higher, something like this. Felt second entry short is so far from the EMA I cannot take. New high, count reset, first entry long. I was considering second entry long at the EMA because we need to get new high. That never formed. We have a break, double top. Can we get technical new high? No. Market reverse, a new high. It is. Market is considering this double top as a new high. It is very close. So I'm going to follow the short-term trend line rule to the downside now. Let's see what's going to happen. We have a first entry short. I cannot sell. By the time I get a second entry short, it's already at the low of the move, right into the support. I cannot go short into the bottom of the small consolidation. So downtrend played out. No entry here. And once again, why this move didn't go all the way up to here? It feels like there is some bearish imbalance present, small one, which prevents me to be thinking about buying below EMA like this. It is tempting, nice bullish bar, but we are pushing lower, slowly but surely. I have to be careful. I need to see a push above EMA to think about buying. And prices are strongly pushing above EMA, which is what I like to see. Brand new uptrend working higher. The reason why I like to see such a nice uptrend working higher is because I'm expecting to get pullback second entry long at the EMA. New high, first entry long, small break. We already have a new high, but the second entry long didn't form, and we're so far from the EMA, so I can't really take this entry right here. New high tested. We'll see if this key level is going to react because we are part of some small consolidation. But market kept pushing higher, so this is telling me, okay, I can be thinking about selling now. Because after breaking new high, if this resistance is valid, you'd expect some stronger selling pressure. The fact that you push higher is telling me, okay, there is some residual bullish momentum. Let's see what's going to happen. I can only sell if I get a felt second entry long below EMA. So this area is going to be pivotal. I have a second entry long here, but I can't really go long because our short-term trend played out with the break a new high. And it's a little bit too early to be drawing any wider channel. It's not fully confirmed. So this is a second entry long. Yes, it is sort of like a breakout pullback. We broke higher, came back, tested it. The key level and the EMA is holding, which is telling you a lot of buyers are buying at this particular price level. But no trend line confirmed. You know, a little bit too aggressive. I need someone double trap or high low. Can I get a high low? No. But this is right now strong bullish push higher, so I have to redraw by the channel. Because right after breaking new high of the original tight leg, we keep working higher and we keep working higher. The explanation is there is a bigger channel developed. So this is how we're following the price action so far. No good easy setup to consider. This one is borderline, you know, more aggressive trader can consider because the bar is so big, close so far up, but it's not the textbook easy hypothesis setup. So now my mind is focused on trending market rules. This is an uptrend. I want to see second entry long at the EMA. I'm not too worried about this key level. Why? Because notice we didn't really confirm it throughout this entire price action. So much momentum here. It's not too significant. The key level is always more significant if you have more confirmations. So I'm not thinking about selling. I just want to see two-legged pullback at the EMA. New high first entry long, second entry long far from the EMA. The market keeps going higher. New high can reset, first entry long. And now we have second entry long again. And this is interesting. First entry long, pullback, second entry long. We're at the EMA. We're very close to be confirming the trend line. In fact, you can make a case for drawing it slightly steeper to confirm the trend line, no problem. Problem is, you're going long right into these highs. So it's a little bit more aggressive. I would like to go long, have this bar been a little bit smaller, preferably some nice reversal bar, pin bar with the body at the EMA, so you have some room. For this reason, it's a little bit more aggressive. It's not a bad setup, it follows the rules because it is a second entry long, it is at the key entry point, it is with the direction or the main trend, which is bullish. It's just the fact you want some bar to form a little bit lower. It ended up working, market keeps going higher. Now we have a new high, first entry long, pullback, second entry long, again at two key entry points. Signal bar is small. You know, you have the same problem, but the sellers are really gonna get trapped. You know, I have no problem if you want to go long here. It's not the big video. Once again, a little bit more aggressive, but it follows the rules once again. The market keeps going higher, keeps going higher. We have a small break. Can we get a second entry long? No second entry long, and we have a push to new extreme. So this was a nice uptrend working higher. Two-legged pullbacks, that's the way how we capitalize on this trending structure. But this time it just formed a little bit too squeezed, a little bit too wedgy. But some traders took it, no problem, it follows the rules. I'm going to redraw right now a brand new downtrend. Working lower because the uptrend played out with the break. Push the new high. Market is correcting. We have a small break, new extreme. And now we have second entry short. Okay, second entry short, new low. First break below this bar indicating first entry short. Failed. If there's going to be a break below this bar, there's going to be a second entry short. It visually looks like a clean two-legged pullback. Market moves in pairs of twos. Now there's a small break in new extreme, but can we make it a little bit wider because it still looks like a part of one move working lower. You can still see it kind of fits. It's not such a horrible idea to draw it a little bit wider. And this is a decent setup, second entry short at the exponential moving average. The single bar is so small, more advanced trader understands what's going on here. Break, push to new extreme, downtrend played out. Additional push lower. So now we really don't have a bias because we are just going sideways. I'm going to zoom out. Yeah, it's very hard to identify the big bias. Uptrend played out, downtrend played out. We're above this main consolidation we started with. But there's pretty much nothing, no pattern. You're going too sideways, so it already feels like area of development. It feels like you're not going to be able to take any good setup. You need some more structured price action. So let's attentively wait and observe. There's no good setup anyway. Breaking new high. You know, it feels like small consolidation because EMA is flat for quite a while. Spike down, spike up, spike down, spike up, spike down. So you can tell there is some small consolidation. New high, first entry long only. Thinking about buying the second entry long at the bottom here at the support wouldn't be a bad idea because it would be second entry long at the bottom of the trend range. But we didn't get it. We can't really take it. I'm going to draw the short-term trend. I can draw a little bit like this too. Uptrend has a small break. Push to new high. And this is interesting. We have a new high. We have a cam reset, micro double top. But the visual looks like one leg first entry long, pullback, second entry long failure. Uptrend played out at the top of the consolidation. We have a felt second entry long, great bearish bar, closing below the EMA, confirming the resistance. Now you have the technical felt second entry long, also can be viewed as lower high to this one, but it is an inside bar, didn't take higher. You can't really take it. I'm going to redraw the wider downtrend like this. I have to follow the short-term trend line rule. You can see it works even inside of the small stacked price action area. Break a new high, break a new low, break a new high. Downtrend is working lower. We have overshoot. We have a high low, but it's not at the key level. Also, it's not the strong enough setup to consider just yet. You know, feels a bit more aggressive. We're breaking higher, so I'm going to redraw a wider uptrend like this. You can see overshoot can generate stronger pullback in the opposite direction. Uptrend kept working higher. I was thinking we're going to get the new high, but there was no setup, no nothing. Market reverse all the way down here, so I cannot argue with the market. Market is telling me, okay, we want to see new low for this downtrend. Overshoot led to break. Because we push below EMA again, we expect new low for this downtrend. So I want to see second entry short at the EMA. This downtrend needs to get new extreme. The short-term additional channel is in play. So second entry short at the EMA would be nice. First entry short, new low first entry. Can I get a second entry short at the EMA? No second entry short. Break. Almost new extreme tested. And because we reversed so far up, I'm going to treat this as new extreme. And I'm no longer expecting new low because the retracement is so deep. You can see today price action is very weak, very choppy. So these trends a lot of times are getting double tops, double bottoms, and market is considering this as new extreme tested simply because it's so choppy, it's so up and down. There is no clear direction, so we have to work with the price action we get. Can I get a second entry long, new high? First entry long, second entry long, because this uptrend is new high. No second entry long again. We already have a break in new high. So what is the bias? Well, similar to what happened here, EMA is flat. We have a spike down, spike up, spike down, spike up. So once again, we are probably in some form of a trading range. Okay, every single time you cannot find a big trending structure, you're probably trading some form of consolidation. And because EMA is going sideways, consistent price swings up and down, uptrend played out already, it makes sense to be predicting a trading range, but I would need to see push below EMA in order for me to sell. You know, we have some short setup here, fell second entry long, which in trading range you can sell above EMA, but feels a bit early. It's not a horrible setup because you can see how bulls are struggling to break higher after new high. There's a kill in play, but it's really safer to sell below the EMA simply because the trading range is just getting established. It is not as proven. Now we have a lower high confirming this bounce of the resistance, but the single bar is horrible. I need to use double bar entry. The double bar entry is too gigantic and it's now getting too late anyway. Market ended up working lower, but it's simply too late. We can only take a setup here. So this is the overall structure for today. Quite an uneventful day. We had a nice uptrend, but the second entries, they formed a little bit too high at the top of the move, and then we ended up chopping towards the close. So yeah, this is the overall price action. I was hoping we would get some more eventful price action, but this is the day we got to trade. I didn't take any setup today. I skipped these setups because I was thinking the market may offer better setups throughout the session, but we just ended up going sideways for the rest of the session and nothing pretty much developed. So I hope you had a good trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.